Like one of our bars for engaging with somebody is, I am doing a thing. Like they have already committed to that action. And I think there's a lot of people that, as you say, sort of like they're really good at coming up with ideas, but they get very nervous about committing themselves to something. That what they want is to preserve optionality, and they always want to have something else in the hopper. Those kinds of people make us nervous.
Welcome to What If with Leslie Grandy. My guest today is Chris DeVore, a founder turned zero-stage venture capitalist based in Seattle, and someone who has spent his career working at the edge where bold ideas meet real-world constraints. Chris launched Founders Co-op during the global financial crisis, built Patagonia's early e-commerce business, helped shape the West Coast Techstars ecosystem, and has backed companies like Remitly, Outreach, and Auto at their earliest moments. Venture capital at its core is a practice in discernment. You're surrounded by possibility, ambition, and compelling stories, but you can only choose a few paths to walk alongside. That same tension shows up for anyone trying to build something new. Most of us are taught to chase ideas. We celebrate imagination, originality, and the courage to start. What we don't talk about nearly as much is the other half of the equation, knowing when to stop or when to commit. For divergent thinkers, this tension is especially sharp. Seeing 10 possible futures is a gift, but it can also be a kind of paralysis. That same mind that generates endless pathways can struggle to choose one and accept the trade-offs that come with commitment. Convergence isn't about shrinking your imagination. It's about giving it a shape that other people can rally around, build against, and hold accountable. Failure plays a different role when you look at it this way. It stops being a verdict and starts becoming a filter. Each wrong turn, each misread of the market, each abandoned version of a product sharpens your ability to tell the difference between what's merely interesting and what's truly necessary. Over time, you don't just get better at picking ideas, you get better at designing the conditions under which good ideas can survive. And then there's the moment we're in now. In a world where AI can generate options, prototypes, and strategies on demand, the temptation is to keep everything open forever. Infinite possibility can feel like creative freedom, but it can also become a way of avoiding ownership. Discernment, choosing what to pursue, what to ignore, and what to walk away from, becomes the real advantage. If you care about building things that last, whether you're a founder, an investor, or a leader navigating uncertainty, this conversation is an invitation to look at creativity not just as the act of opening doors, but as the courage to close some of them too, and stand behind the ones you decide to walk through. Thank you for joining me today for What If with Leslie Grandy. In this episode, we're talking to Chris DeVore. Chris and I met a long time ago, although I'll have to see if he can remember when or how that was. But to tell you a little bit about Chris, Chris is a founder, operator who turned VC and launched Founders Co-op, a stage zero VC fund focused on the talent-rich but capital-starved Pacific Northwest. And he launched it during the global financial crisis, so a very bold and brave move. He created Patagonia's e-commerce business in the 1990s and co-founded and failed out a VC-backed local search business called Judy's Book. In the early 2000s, as a side project, he built and ran the Techstars franchise on the West Coast for a decade. And as a VC, he's had a successful outcome for companies like Remitly, Ally, Outreach, and for which he was in the seed rounds and also was an early investor in Auth-O. One of the things that I love about Chris is that he sits right at the junction between imagination and action, where bold ideas meet capital, timing, and the discipline to say this is or isn't the one. So welcome to the podcast today, Chris.
Thank you so much for having me. I'm looking forward to the conversation.
Terrific. Do you remember when we met? It seems like a mystery to me. I go back and then I can't remember.
Yeah, no, it's funny. I often rely on LinkedIn's connection date to kind of give me a timestamp on that one. I did not preload that for this conversation, and I won't look it up now. But I'm sure I could dig it out. Between Gmail and that timestamp, I'm sure we could
It's
find
been
it.
a while, though, right? We've known each other through a lot of the development of the Seattle tech community, and I've always admired your work. I've always admired your consistency in your work and your commitment. I think you stay on brand for what is valuable to you and what's meaningful to you in a way that I really admire.
That's very kind of you to say. I think we all just try to do what makes sense to us, and I do what makes sense to me. And if it seems consistent, then I'm just maybe I'm sticking to my knitting, right? So
That's great. One of my favorite things you've said is that all human progress comes from unreasonable people attempting impossible things. I just love that statement. I think I'm going to try to figure out how to put it into a plaque or something because I think it really expresses the importance of breakthrough thinking at a time when people don't see the possibility that you see. So when an idea sounds impossible, what tells you that it's productively unreasonable rather than just ungrounded or unhinged? What do you look for?
yeah, no, it's a great question, and I think it's like so many. Like the founder experience is so appealing to people, right? Because it's like a blank sheet of paper, total creative freedom, the ability to go in any direction you want. And I think many founders are fall in love with the freedom, but don't actually point it in a productive direction. And I think it's rare to have a founder that embraces the sort of journey of being a founder, but also is very grounded. And I'm going to solve a real problem for a real customer that I can find and identify and talk to and learn from. Because I think some people want everything to be sort of springing from their forehead, like Athena from Zeus, kind of a thing. And the best companies, I don't think, come from that sort of whole cloth. They come from really sitting with a problem and thinking there's got to be a better way to solve this problem that matters to me and matters to other people. So a problem orientation rather than just a founding or a creative orientation, I find a much more productive vector to get people on a productive.
That's great because it really takes me to my next question, which is when somebody shows up with a solution to a problem, how do you actually know it's a problem worth solving? Like, especially if it's in uncharted territory or an ambiguous space.
Yeah, and again, I should be specific. So, like the kind of investing that I do is I'm only a software investor, and our firm, I have one investing partner. All we really do is enterprise software. So we don't do consumer or social or kind of things that are more marketing driven or more conceptual. We tend to start with founders who have been in enterprise or been in industry, and they've learned something about the industry, and they've gotten frustrated. It's like it's so dumb that we do this thing this way. There has to be a better way. So I can't speak to the whole universe of how people start problems. Our bedrock is, do you actually know something about the customer and the industry and the problem set that you're choosing to solve? We don't typically engage with people who are like, I think the world should, be pink and I want to go make it pink. That's not typically where we start as investors. I know other investors have a different scope and are willing to entertain different kinds of things than we.
Yeah. So that's interesting. As you have launched several funds, I think you're on your sixth fund now. Has it changed how you think about evaluating ideas, or has that always been the MO? Has that always been how you thought about who you're going to back and what's the reason this idea is worth backing?
Yeah. So I mean, again, it's hard to encapsulate. Like I've been doing this for 18 years, and I didn't come up in the industry. I'm self-taught, as is my partner. We were founders and operators before we became investors. I would say so much of how we do the work is informed by all of the mistakes we've made since day zero as investors. I think between the Techstars program and the fund, we've made, my partner keeps better track than I do, 275 first check investments. And in many cases, those companies sat in our office for the first 3 months of their life, and we got to interact with the founders and help them sort of figure out what to do to get launched in a productive direction. So I have a very rich mental database of patterns of success and failure, some of which are industry based, some of which are product or execution based, and some of which are really interpersonal dynamics and how founders interact. So we can take those in any direction you want, but it's hard for me to distill down one nugget because there's so much learning, so much, I guess, it's hard knocks or mistake based learning, which is the way that I learn best is by trying things and seeing what happens and not just reading about it or theorizing about it. So I have lots and lots of stories to tell about why things tend to go off the rails and why, and if they don't, why they tend to steer into a more productive kind of incrementally compounding journey to being a real business.
So the knowledge of failure sounds like it's a real asset for you. I mean, it's a real guidepost for you in thinking about how you make choices. And so it makes me wonder if one of the portfolio companies you backed never really launches, right? Never really materializes the value you saw when you brought them on board. What changes in your philosophy, or does anything change after that sort of experience?
Yeah, no, I think a lot of what we do, and I think a lot of the work in our partnership is that sort of post-mortem or unfolding, like even if the company's not dead yet, to really kind of diagnose like what's not working. You know, if you interact with a founder, which we often do every week or every 2 weeks on their journey, and you often ask the same set of questions, which is like, what's working, what's not working, how can we help, where are you stuck? You start listening for the same things over and over. And I think the ones that fail to launch, I would say there's sort of a couple of different vectors of that. One is that, and I would say the most common one is not a failure to execute on product or a failure to sell, but it's that the founders themselves don't have a high fidelity feedback loop between what customers say they want and what they go and build. That either the founder is imagining things that the world might want and building them in anticipation and then being disappointed when they aren't actually what the customer wants, or they build something that they think is what the customer wants, they give it to the customer, and the customer says, "Oh, that's close, but it's not quite it." And they can't. It's the fidelity and speed with which you listen and learn and iterate that gets you to good. And something about that cycle is broken. And I would say more often than not, it's not the customer's fault. It's the founder or the founding team's fault. A failure to listen, a failure to apply what they're learning, and a stubbornness about wanting their vision to be what the world gets instead of what the customer actually says they want. That it's breakdowns in that chain of listening, learning, and iteration and execution that tend to cause things to get gummed up and companies to fail to progress.
So that's really fascinating. You kind of find that out after the fact. Do you think in retrospect, like you say, when you're doing a postmortem, that you can look at that founder and that founder's behavior and see signals for that potential risk?
We definitely try. And I think that the one other thing I'll say about founders as humans is it's a very, I would say, rare. It's not, I would say, of all the kind of professionals that you know in the world, maybe 1 to at most 5% of them have the kind of temperament and skill set and kind of mental makeup that makes somebody an effective founder, because there's these sort of yin yang knife edge requirements. They have to be extremely confident, self-confident, and willing to take risk, but they also have to be humble and willing to listen and learn. And again, that yin yang combination is really, really rare. And really, sometimes people are very confident, but they don't listen that well. And that's a kiss of death. Or they're waiting for someone to tell them what to do, which means they don't have the agency to get out in front of problems and execute really well. Another kind of breakpoint can be they're a really effective individual contributor, like they're really high agency and high competence in their own world, but they struggle with communicating or bringing other people along on the journey. So they can be really good, like kind of, team of one or team of two, but they can't transcend to build leverage in getting an organization to follow their lead. So there's these sort of moments or increments of failure that cause people to fall out as founders. But I do think it's really not it was a bad idea. It's almost always this human or set of humans had the wrong temperament to be effective, because no business is right. No product is right in its first instance. You've experienced that yourself, right? It's always incremental. And it's that the failure to get it right, not in the first instance, but to build a mechanism to get it progressively righter and on a short cycle. That's the thing that's really hard to do, because it does require this weird combination of skills and attributes that many people, even if they excel on one vector, they fall short on the others. And the package is what's required. And the package is very rare in my experience.
How do you look for that, though? How are you able to assess that? I mean, you see this passionate, forward-thinking entrepreneur with an idea that you think has legs. How does it reveal itself early enough that this may be that type of stubborn or narrow-minded approach to the solution you want?
It's often, so like usually the way that we think about evaluating an opportunity is either I or my partner will meet a founder or founding team, and without a lot of information sharing to the other one of us will head down a path with those people of just talking to them about their journey. Usually it's not about the company they're currently building. We'll get to that. But really, we always want to start with, tell me about your career journey up to now. Tell me about the decisions you made that you thought were really impactful that led you to this point. And then similarly, if they're working as a team, tell me about how you people, you guys or gals, came together as a group. What brought you together? What caused you to decide to start something together? And what are some of the big learnings you've had about your interactions with each other or about the journey to this point? Hearing people talk about both how they've managed their own careers and then how they've tried to do things in concert with others. Usually that storytelling has a lot of tells in it, signifiers in it about how much, again, like confidence versus humility, the ability to communicate and listen to other people, the ability to represent a point of view, but also have your ideas changed by other people's contributions. It doesn't take a lot of questioning. You could do this in an hour to quickly get to, I think these people may be high potential people, but they're probably not the kind of founder that we would want to work with based on our experience. So it's, again, the evaluation at the stage at which we invest is almost never, is this a good idea? I mean, we'll get to that. That's a second order problem. But is this the kind of people, or is this the kind of team that has the self-awareness and motivation and drive and learning skills that make for effective founders? And only if we get over that hump can we engage on what they're doing and whether that's interesting to us or not.
So as much as you might find a founder who gets like really laser focused on the approach to the problem and the way they want to solve it, we also talked recently about the fact that founders tend to be really divergent thinkers and could actually come up with, 100 ways to solve a problem. That's kind of the other end of the spectrum from what you've talked about, which is they're latched onto a particular approach and aren't as willing to adjust as they get feedback. There's the other version of the founder where they just keep spawning ideas, but cannot really move them forward. If you find that you're working with one of those people who might seem a little bit less committed, right, to a single path or to an approach, or might be afraid to commit too early to a single path or approach, how do you coach that kind of a person? What do you do when you find out that you're really sort of stuck in idea generation as opposed to moving towards an execution?
Right. Yeah, I think at this point we have the luxury of pretty much we not working with people who say they're going to do a thing. Like, one of our bars for engaging with somebody is, I am doing a thing. Like, they have already committed to that action. And I think there's a lot of people that, as you say, sort of like, they're really good at coming up with ideas, but they get very nervous about committing themselves to something. That what they want is to preserve optionality, and they always want to have something else in the hopper. Those kinds of people make us nervous. And actually, what we prefer is people who are kind of maniacally obsessed with a particular problem, and they frankly don't care about any other problem. Like, they come to us and they say, "Look, I'm so angry and frustrated that the world works a certain way that I'm going to walk through walls to see if there's a better way, and this is how I'm going to do it." And so the sort of idea generation or the creative energy of like, wouldn't it be cool if, carries very little water with us. We're frankly much more focused on borderline obsessives who can't not think about the problem they've chosen to think about, and nothing else really interests them. And they're not at all distractible, because if you don't want to talk about whatever it is that they're focused on, they're going to go find someone who does. Like, that's the level of obsession that draws us in as investors.
There probably are some cases, though, where that obsession does need to meet a pivot point, and somebody needs to think about the idea through a different lens. And imagining those people need to be coached heavily to accept the pivot.
Yes, and again, I can think of lots of different examples of, and this is sort of we talked a moment ago about whether you're a listener, whether you're trying to convince people of a thing, or whether you're listening to what people are telling you and trying to put that through your filter. And the people who are trying too hard to convince the world that they're right, that their need to be right trumps the desire to solve the problem, is a total failure mode for a founder. And some people they seem confident, but they're actually very emotionally fragile. And what they really want, what their confidence is doing, is trying to assert their correctness of their views. And that's the opposite to what a good founder does. The good founder says, I know there's got to be a better way, But the way to find the way is to go out in the world and talk to lots of people and listen to how they describe the problem. Because I'm just one person. My experience is limited. I need to build a much richer data set of experiences to inform my thinking here. And it's that synthesis of lots of people's description of the problem that will allow me to come up with a better, more creative solution. And again, I'm talking around the problem, but the idea people often really need it to be their idea. And the entrepreneur, the founder, doesn't care if it's their idea, it's their energy, it's their passion, it's their commitment, it's their focus that is the engine that drives them forward. It's not the ownership of the idea.
And so I think what probably accompanies that personality is the difference between resilience and a refusal to listen and let go, right? Somebody who is willing to push through the resistance to get more data, more insights, more inputs, right, to make a better product or a better outcome versus someone who just is stubborn and driving into the wall, right? I think that resilience allows somebody more to pivot, right? And that you probably see that is when there's friction, some people exhibit refusal to listen to the friction versus a resilience and an adaptability to address the friction.
Yeah, and I think to use the word pivot, if you the difficulty in pivoting is only if you're too invested in the thing, you're holding on too tightly to the thing that's yours that you came up with. And it doesn't feel, if you're just following what the customer says they need and you can solve it in a better, more creative, more efficient, lower cost way, then it's not a pivot at all. It's like, oh, I'm listening for the thing that will allow me to deliver a better solution. Once I find that thing, then I can go execute against that. It doesn't have to come from me. It has to come from the synthesis of my listening and my skill set at solving the problem the customer says they has in a novel or more creative way.
I hope you enjoyed this episode of What If with Leslie Grandy. If you'd like to learn more about how we can work together to expand your organization's capacity to innovate, to leverage AI as a strategic thought partner, and to inspire your teams to think bigger and take intelligent risks, visit lesliegrandy.com today. That totally makes sense. And it leads me kind of to the question of when there isn't data, really isn't, hindsight to lean into to help predict potential for an idea. And maybe the consequences are big if the solution actually works. What anchors your decision making about what you pursue? And how do you think when you're sitting there, you've got this great founder, he's showing the entrepreneurial traits that you have, but I can't really tell how big this idea is going to be. I can't really tell if it's worth investigating.
We should tease apart the market size question, which is the how big, and the why is my solution going to be better and different, which are two different. One, the better and different has to come before the market sizing, because you can build a better and different solution that has a ceiling on it from an opportunity perspective. So the first order question is, and one of the reasons why I'm only a software investor, and I think I've just, you and I both had this sort of lucky experience of growing up when there were these successive waves of technology kind of transformation that kept introducing new ways of solving problems. For me, it began with I was in the wireless communication industry when cell phones were new, and that was interesting. And then when the internet came along, I was able to kind of see and be excited about and get involved in how the internet was going to make things possible. And then cloud and SaaS and mobile. So like every time there's a new inflection point, and right now the LLM wave is what people are excited about, and I think it's legitimate, transformative capability. Anytime there's one of these sort of step functions or new capabilities, you can look afresh at almost any industry and say, how does this change the economics, the scalability, the speed to market, like whatever it is. So the reason why I'm a technology-based investor is every couple of years, maybe every 10 at the long cycle, you get to take a completely fresh look at almost any large industry in the world and say, is what's changed? Is something different about this industry? And in almost no other category of business do you have that kind of volatility. So it makes for just very valuable, very scary to incumbents, very valuable to insurgents, disruptive change. And so the first question that you have to ask is there something fundamentally new about the way the world works today that was not true a year or 5 years ago that allows someone to take a fresh look at an opportunity that wasn't possible before. And I think LLMs or AI, or call it what you want, are definitely doing that on the vectors of how software is created, how text-based content is created, anything that you can take essentially a model of all human knowledge, abstract it into vectors and statistics, and generate new software or new content way more efficiently and with high fidelity than before. That threatens all kinds of industries. So it's an incredibly fun, interesting moment to be investing. But then the second question that you asked is how, even if they can use AI, use an LLM to do something better, more efficiently, how do you know if it's worth it? And this gets into the math of startups and venture economics, which is most startups fail for lots of reasons that are not about technology, just whatever, competition, market dynamics, overcapitalization. Assume failure. A very small number are going to make it. You're going to lose a lot of money on all the ones that don't work. The ones that work have to work at such a scale that you pay for all of the risk of the failed ones and generate enough return to justify the illiquidity and the risk capital that you've put to work. So things have to have a certain scale on the tail when they work to pay for all of the expected wipeouts along the way. And that's where I think a lot of people who, even if they have a good insight and know how to use technology, get frustrated by venture capitalists because they come and have a conversation and I can say, that's a really good idea. I really like the way you're approaching it. I think your technical solution has merit. I really like your team, but it's too small. And they're like, well, but what do you mean? It's like, that's really frustrating. It's a good idea and I can build a business. Like, yeah, you can build a business, but it can't ever achieve the kind of scale that I need to pay for all the stuff that I'm going to do that I know is not going to work. Because that's my business model and your business model are different. And so we have to get through all these gates. Do we like the people? Do we believe that there's a moment in time when the technology can be executed in a different way? And can it be big enough to make our business work? Which is why the default answer in my business is no, not because there aren't talented people doing exciting things, but you have to get through these progressively difficult gates of fit for what I need it to look like to make my business work.
That's fascinating. And I'm glad that you brought up LLMs and AI, because I wonder if that in any way has influenced your investing strategy at this moment in time. How much weight are you putting into it as a transformative technology in your decisions about what you invest in? How do you let a technology like this influence or weight your decision making?
Yeah, and again, I'll try to keep it kind of simple, but I should at least talk about there's sort of two tracks to the answer to that question. One is whenever there's a new technology wave that people feel to be truly disruptive, there tends to be a flood of capital into that opportunity. And so very quickly, something that may be true from a technological standpoint becomes illogical or unwise from a financial standpoint, because too much money chasing a small number of opportunities, things get overvalued, prices get stupid. Like it's hard for the economics to work, even if the technology has merit. And I think we're in that kind of moment in LLMs, which is the foundational capability of LLMs feels very real. It truly feels transformative to how certain kinds of work are done, the efficiency and scale and velocity that work that's done that again leverages this technology. It really is a state change in how you can do the work. And so much money is now chasing LLM-based opportunities that as an investor, you have to say, not only can this be done technically, but can it be done in a way that makes financial sense, both for the founders and for the investors? And so we always have to be evaluating it on at least those two vectors, right? So I think LLMs really are everything that people say they are. They are going to change the way knowledge work is done in so many different ways. And we're still in the early innings on what the models can do and how capable they are. And I think depending on where you place your bets in that, it's much easier to think about making a bet on the applied side of that, which is I'm going to keep leveraging the latest model that comes out because the velocity of change is really high. And as long as I'm indifferent to whose model I'm using, I'm just going to use the best one that's out there and solve a problem for a customer. Like that, I understand. But to say I'm going to bet on this model maker, meaning OpenAI or whomever, having the best model and they're winning at the model wars, that so right now, Sam Altman of ChatGPT OpenAI is out trying to raise money at an $850 billion valuation. And he's burning $10 billion a month, something, pick the number. Like the numbers are astronomical. They're just astoundingly large. You lose perspective on how many zeros are involved here. Does his business have merit? I think it remains to be seen. Does his technology have merit? Absolutely. So again, there's this, the way that capitalism works is money floods into things. And it's, again, very frustrating to entrepreneurs to have an insight that's a good insight and yet just not be able to participate in it because the capital markets don't. You aren't legible to capital is the phrase I've heard used recently. Your idea has to be both good and legible to the capital markets. And technology waves like the current one create great confusion about what kinds of ideas are legible to capital, if that makes sense.
Yeah, totally. One of the things you hear a lot is that AI is making everybody a coder and providing everybody with ideas that they didn't have access to before. And so maybe more people think they can be entrepreneurial because they have assets and tools that they didn't have before. What is the role of the human in the mix when you see, all this vibe coding and all of the possibilities that people have to bring an app, a solution to life using AI as a technical partner? How do you really rate the human in the mix in that equation?
An analogy that I'll use, and I know you've done a lot of work in the media industry over time, is remember when Blogger first came out, and there was this idea that there were these dominant media voices, and all of a sudden anybody could write and publish on the internet, and there was this great proliferation and enthusiasm about lots of different voices. Anyone could say anything and get distribution and publish, self-publish. They didn't have to go through publishers. It was a magical moment in content creation. And yet in the end, I think what you realized is every efflorescence of creativity ultimately gets bottlenecked by distribution, right? People's attention is finite, and there's only so many voices that they can pay attention to. And so the discovery and access to content and the vetting of what's good and what's not good becomes the more valuable layer, which is why the Googles of the world become so valuable, or in maybe in modern terms, the ChatGPT or the AI lens that answers the question for you. Discovering the content becomes the valuable part, not the creating the content. And I think the same logic may well apply in this current cycle, which is there will probably be an efflorescence of software creation. The bar to create functional software has gone way down because AI makes it so much easier to create software that works. But then it becomes like software for what? And if I need a software product, then it's like, well, am I going to write it myself? Am I going to go find somebody else to do it? Do I know how to maintain it? There's another, been kind of coming at it from another angle. In the land of enterprise software, there's a phrase, a term of art that basically is the customers like to have one throat to choke, right? They don't want to have 1,000 different apps that lots of different people wrote inside or outside the enterprise that do lots of different things, and there's security holes and bugs and data. Like from an enterprise perspective, I want to know who my vendor is, and if it doesn't work, I want to know who I'm going to call to fix it. So which is sort of the same logic, right? At some point, it's knowing who's accountable for solving the problem more than can I create a little app to do a little thing that becomes the valuable thing. And I think we're going to follow that same arc, which is there will be a lot of software created. A lot of software products will become irrelevant or less valuable because someone can create them themselves. But then it's like, okay, how do I stitch all this together in a way that makes sense? How do I maintain it? And if I don't want my job to be managing software, who can I get to do that for me? So there's always a reinstallation of a distribution or a point of concentration after every wave of creative efflorescence. That's sort of the sine wave of creativity and distribution and accountability that has to follow.
That's really a great way to look at it. I guess in one sense, I was wondering too, if maybe this accessibility allows people to test and iterate ideas faster, giving you greater confidence in the thing you're investing in, right? And so people bring something that may not be, customer ready, but is illustrative of or demonstrates the potential of an idea. And that really helps sell them, both because of their initiative to go build something out that could demonstrate and test and learn, but also for you to make it sort of more concrete and less mysterious.
Yeah, no, I think that's emphatically true, which is, there was and I'll roll all the way back to when I started in this business, which is it used to be that to build a software company, you wrote, and this is like way back in like the 80s and 90s, you wrote a business plan and you went and raised $5 million and you bought a bunch of hardware and you licensed a bunch of software and you hired 100 engineers to go build the thing. And then you could find out if there was an idea there. And with, open source and cloud, like that cost arc just kept coming down, which is like smaller teams, better tools, lower costs. And we're now at this point where anybody can basically speak their intentions into a context window and get an application out the other end. So the ability for almost anyone to instantiate software now, like that cost curve keeps falling. It doesn't mean that because you can create a thing that it has. So we're going back to like, how do ideas get to good? They don't get to good through the first version. They get to good through prototyping. There's no excuse at this point for not doing really high quality, high fidelity, functional working prototypes, basically, to get customers to touch a thing and tell you why it's wrong. And like you can learn so much faster. So the barrier to learning has gone way down, but the bar to acceptance, because there's so many more people who can do it, the bar to excellence has gotten that much higher. Which is when anybody can do a thing, back to the kind of the blogger thing, figuring out who's good at it, who's trustworthy at it, who's really in it for the long haul becomes the higher order bit, not the thing itself.
Yeah, and also who has a differentiated approach or perspective on that thing, right? There's something that sometimes is necessary when the wave sort of creates a motion in one direction for there to be a provocative thought that might redirect the current. Right. And so sometimes having that momentum, like I say, capital flowing into AI, everybody coding AI demos and prototypes. I think the thing is that becomes even more imperative is that differentiation, that distinguishing element in the flow where everybody can do the thing.
Yeah. No, and I think the analogy that's in my head, because we were the first investors in a company in Seattle called Outreach that does sales automation, right? So raised a bunch of money at big valuations, pre AI, and we are still investors in the company. And so we get approached for people who want to say, hey, I want to do a new thing in sales enablement, sales automation. And the problem now is because people like to sell to the revenue engine because they're like companies are more willing to spend on things that make them money, right, than cost them money. Lots and lots of people have created startups that try to do something that sells to the revenue engine. And customers, meaning the enterprises that buy these products, are so overwhelmed with people approaching them to sell them some new widget that even if there is a needle of a gem in that whatever sandbox, I have to use to mix my analogies, it's so hard for customers to spend the time to find the gem that they're just like, stop. Like, I'm not going to look at any more of these. Go away. I don't have time to evaluate 1,000 new AI-enabled widgets for my go-to-market mode. I just can't. So that the noise level is so high. That's the downside of this proliferation. There are new, genuinely novel, creative, excellent ways of doing things, but they can get lost in the just the volume and the velocity that this is unleashed. And I don't know how to solve that problem. It becomes a curation problem, not a creative execution problem.
Yeah, makes total sense. I've really enjoyed this conversation. I have one really thought-provoking question for you personally. What else would you do in your professional life if you couldn't be a first check investor or a VC? And what kind of impact would you want to have?
It's funny. My wife always jokes that this makes me the biggest like cocktail party downer ever. Because usually someone has like a really fun, I would be like an international explorer. I'd be an archaeologist. Like, I don't have a good answer to that question because I really I feel so lucky to be able to do what I do, because it allows me to play at the intersection of, I love technology and how technology is disruptive. I'm interested in business and incentives and how the incentive machinery of capitalism causes things to exist in the world. And I'm interested in people and why they do what they do and why they succeed or why they fail. And to have essentially a laboratory that all day long, I get to think about, like, where is technology going and where is capitalism going and what kinds of people are drawn to this work. I can't think of a more satisfying place to sit at the center of things that I just find genuinely interesting. And I honestly don't know. I really struggle with that question, which I'm sure is irritating to you and to anyone who's listening to this podcast. But yeah.
No, I love it because I think it shows that not only the true commitment to what you're doing, but also an authenticity about what you're doing.
Where you began by saying I've been consistent, like I figured this out about 20 years ago. This is what I wanted to do, and so I just I just stick to my knitting. I get to do what I like all day, every day. I hope I get better at it. Like I'd like to think I'm learning the craft progressively, but it's easy to stay in the work because the work is so engaging.
Yeah, that's terrific. So if people want to learn more about Founders Co-op or about you, what should they do? Where should they go?
So, and again, my partner reminds me all that the URL is terrible because it reads like Founder Scoop, which is never the intention. Founders Co-op is the URL for the website that explains who we are and what we do, and it's pretty self-explanatory. But if you're curious about the work that we do, that's a good place to look. And LinkedIn. Of course, I'm on LinkedIn. You can find me there. But those are the two places that people usually find.
It's been great talking to you, Chris. Thank you so much. I really appreciate the insight. And for all the time that we've known each other, I don't think I've ever had the chance to delve into these kinds of questions with you. So I've learned a lot, and I really appreciate your openness.
No, I'm so grateful that you asked. And again, I'm excited about the book, and it's just fun to have a reason to have these conversations. So thank you for having me, and I'm excited to know if who listens and what they make of it.
Great. Thanks so much for joining me on What If with Leslie Grandy. You've been listening to What If with Leslie Grandy. If you want to learn more about creative leadership in the age of generative AI, subscribe to my Substack at lesliegrandy.substack.com.